Why are people having a hard time buying homes? It's not just because of how high home prices are, and that's what I'm talking about today. So make sure you stay tuned. Hi, this is Melissa Ballman, and I'm a real estate agent here in the greater Salt Lake City area. So what that means, if you're looking at making a real estate move, I'd love to connect with you. Shoot me a text, send me an email, do what you got to do, but get in touch with me. But first, today I'm going to give an overview of some of the problems, especially first-time home buyers are experiencing and getting into a home. That comes from debt, down payments, and how exactly all of that is affecting a person's ability to buy a home. And also stay tuned till the end because I'm going to give you some tips on what you can do to help get you in a better position to get into a home and stop paying somebody else's mortgage and make your own mortgage payment and really benefit from your future as far as building equity for yourself and having something that you're paying towards for yourself and not your landlord. Now, first things first, I got to get this little disclaimer out of the way in this video. Keep in mind, I'm giving general information. Every situation and every person's credit score is going to be different. The type of financing, their debt to income, all of that is going to be taken into account when you get a home loan. So what I'm saying is just general overall information, and you definitely should talk to a qualified lender to get a better picture of your situation. So if you need an awesome lender, reach out to me. I'm happy to share some with you. Okay, so first, let's talk car loans. I have recently spoke to somebody who could not qualify for a home purchase price that they wanted because they had no credit card debt, no student loans, but they had one car payment. So a lot of times people are really surprised by this and how much a monthly car payment can knock down what you qualify for when it comes time to purchasing a home. Okay, so very general, high level, not specific to a person's qualifications or anything else. But let's say that you make $60,000 a year. Your debt to income ratio is below the standard 43% for conventional. All of the boxes are checked. You make $60,000 a year. That would technically qualify a person to have a purchase price of up to $520,000. Now, let's add a car payment in there. If you have a $300 a month car payment, which, let's be honest, if you have a $300 a month car payment, you're doing something really well. That would actually drop your qualification from the $520,000 down to $450,000. That is a huge decrease in sales price when our home prices are already climbing every single month and almost unachievable for a lot of people. So if you have a car payment, that's one of the first things that you should really consider. Again, I don't know your financial situation, but I wanted to give that as far as that's a really big ticket item when it comes time to qualifying. So how about student loans? Okay, so I have talked to people who say, yes, I have student loans, but I'm not having to make payments on those student loans yet. Well, the mortgage company still needs to account for the fact that you're going to have to pay those at some point. Student loans are like taxes. They know that they're going to come due and you're going to have to pay that. So they're still going to calculate your student loans into your debt to income ratio. And typically that's about 0.5% of what they're going to calculate your monthly payment to be. So let's say you have $60,000 in student loans. That's going to put you at about a $300 a month payment. And we just talked about what a $300 a month payment does for qualifying when it comes to a car, and student loans are going to be the same. I hope you're enjoying my video so far today. If you haven't already, make sure you subscribe to my YouTube channel and click the bell. That way you're alerted each week when I drop a new video. And if you're on Facebook, hop on over to our private community page called Salt Lake Life. And there we talk about all things living in the greater Salt Lake City area and really Utah as a whole. So of course, one of the biggest things stopping people from buying a home is not having a down payment or enough of a down payment. And you absolutely need to have a down payment. So make sure you start saving or continue to save for a down payment. I just recently spoke to somebody who I said to them, you want to start making a down payment. You can qualify for FHA 3.5% down loans. But really there are lenders now that are doing 5% conventional loans. And I would take a conventional loan over FHA all day long because it saves you on the PMI insurance or how much PMI insurance you're paying with 5% down versus 3.5% down. So make sure that you're saving for that down payment. And as a safe rule of thumb, I personally would save at least 5% of the sales price that you are looking at. And also, make sure that you're shopping off of a mortgage payment you're comfortable with, not what you qualify for. So if you know that you're comfortable with a $2,000 a month mortgage payment, then you need to find out based on your credit score, your debt to income, what you make, all of that. You want to talk to a lender and find out what sales price range should you be looking in to get that $2,000 a month or so payment. Okay, so action plans. Pay off those debts, whether it's credit card, car payment, student loans. Start chipping away at those things. With credit cards, you want to make sure that your balance is below that 30% of your credit limit. Start saving, okay? You got to make sure that you have savings for a down payment. And even if you're getting a gift or a 401k loan or whatever you're doing to come up with that down payment, things always happen when you own a home. You always have unforeseen circumstances that come up and expenses. It's not like you can call your landlord or your apartment building and say, hey, my water heater is not working. Nope, that is coming out of your pocket now. So it's a good rule of thumb to always have a savings when you own a home anyways, so that you can pay for those unforeseen circumstances that always seem to happen. Don't think waiting for the market to crash or to stabilize is necessarily going to be the best thing for you. Coming up in a few weeks, I am going to have one of my lenders that I work with come on and talk with me about what they're projecting for 2022 and why waiting may not be in your best interest. So watch for that video in the coming weeks. I hope you enjoyed today's video and got some useful information, especially if you're a first-time home buyer here in the greater Salt Lake City area or Utah. If you have questions, feel free to reach out to me. I'm always here to help, but as always, make it a great day.